The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
About 2 minutes away from the end of the trading day, Alex Steele alongside Scarlett Fu going to take you through the closing bell on a global simulcast. We're joined now by Bonnie Quinn, Carol Masser, and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide. We're going to parse through the crucial moments of the trading day, which is pretty much every single moment. We are off the lows, but we're still looking at S&P down 3.3%.
Yeah, exactly. Right. Lots of volatility once again. Very different tone from what we got yesterday. We are, as you said, Alex, I think it's important that we did see a bounce off the lows. We'll see what happens in these final minute and a half or so of trading. But you are seeing broad-based selling. Most names in the S&P lower here.
We just had a really sobering conversation with Rich Weiss at American Century Investments. He's not buying the dip. He said it's like catching a falling knife. Vonnie, he says this downturn is more serious than the other ones. He called this a man-made catastrophe.
And by the others, he means the great financial crisis or COVID. I mean, this is what he's saying the environment is.
Yeah, I mean, Ben Emmons calling it this morning a yippee-ki-yay market, and it really does feel like the Wild West out there. We haven't had any circuit breakers triggered, but we certainly have had moves of more than 5%, 6% in some cases, and we may not be done. Bloomberg's Matt Levine saying this is a buy the truth, sell the news moment. So what is the truth? The truth is that there are plenty of tariffs, and they have been put into effect.
Well, the truth is nobody knows what's going to happen, and the data will be backwards looking, although we do get the University of Michigan Consumer Sentiment report tomorrow, and inflation expectations on a one-year basis. That'll be critical because that's a lifetime read, although it is based on what people say, not what they do.
I love me that you Mish. I should point out, guys, we just talked to Steve Sosnick, and he was saying that retail clients are still buying that dip. That conditioning still stays. There we go, the closing bells on this Thursday. You're looking at declines for the S&P coming in around 3.5%, the NASDAQ around 4.5%, the Dow off 2.5%. I should point out, if you take a look at the S&P, the NASDAQ 100, the NASDAQ, the Mag 7, they all fell the most at 1 point today, since the most since 2020.
All right, to the S&P 500 I go, guys. 428 names to the downside on this Thursday, 74 to the upside. Scarlett, one unchanged.
All right, let's take a look at the IMAP, which shows you the different sectors in the S&P 500. Basically a sea of red, although you can see that consumer staples did finish the day just marginally higher. Yeah, by 0.2%, and that's thanks to the likes of Kroger, Church & Dwight, Colgate, and Kimberly-Clark. So classic defensive consumer staples, companies that will be around, that will continue to do business even in a tough economic environment.
All right, that's a lot of red. I was terrified to find gainers today that they would hold, but
and
I got a few.
You did it.
Kroger up 3%, guys. The consumer staples.
You got 4. That's what we call an overachiever.
I was. Consumer staples, I think as a whole, I think they finally blipped into the green a little bit overall, but nonetheless, we saw some pressure on that group. But Kroger, among the names that did actually show some gains, up about 3%. Gold, right? Mining stocks advancing today. Bullion prices climbing to a fresh record. And so you saw investors moving into this. A safe haven, right? Gold. And so you saw Newmont among the gainers, up about 4.5% in today's session. This one's up about 35% year to date. Here's a biotech company, folks. Keros Therapeutics up about 18.5%. This is after initiating a review to evaluate strategic alternatives. They're also thinking about a potential sale. It's based in Massachusetts. It also adopted a shareholder rights plan in response to, quote, significant and rapid accumulations of the company stock by investors who have indicated a desire to influence the control of the company. So this one was an outperformer. And here I go. PriceSmart. I've never heard of it. It's up 7% today. This is a $2.7 billion market cap and operator of warehouse clubs in Latin America, and they reported second quarter earnings per share that beat estimates. So that's where investors were hiding today.
You got to travel abroad to find those gainers, Carol. Easy job that I had. In fact, I picked a couple indexes because there were so many stocks lower.
Embarrassment of riches.
It really was. I want to start with the Mag 7, down 5%. Dragging down indexes a day after posting its best day ever. Yesterday it rose 15%. Today it fell as much as 8%, but it settled in lower by 5%. Tesla, Meta, Nvidia, and everything else in the Mag 7 were lower. And have you guys talked about what happened to CarMax today? Shares falling 17%. This after the company said it's removing timelines from its financial goals due to uncertainty around President Trump's trade war and broader macro factors. They are, though, seeing increased demand for used cars, and prices are going up for them due to expected tariff impacts, though they're facing rising costs for parts, and they're looking at mitigation plans as well. Also, keep an eye on shares of Disney. Disney fell by, let's go ahead and round that up to 6.9% today. This after we learned that China will reduce the number of imported U.S. films and introduce more films from other countries. That's according to a government statement. Disney got about 10% of its revenue from the Asia Pacific region in 2024. That's how it breaks it down. The president was asked about this news from China earlier today at his cabinet meeting. His answer to the question was, quote, "I think I've heard of worse things." He did not elaborate beyond that. And finally, semiconductor stocks getting beat up today. This after they were up 19% yesterday. The stocks fell 8% today. Everything was in the red.
An interesting one as well was the 30-year auction. We were all waiting for that at 1 o'clock to see if there would be a bid, and there was no buyer's strike. It was good news for that auction. Pretty strong demand, although if you're looking for any kind of a directional signal, the bid didn't hold quite so well as yesterday's auction after the auction. So we had the 30-year rise about 4 more basis points after that auction to finish the session now at 486.51. I will point out, though, that the 2-year went in the opposite direction, down 6 basis points, 384.33, right in the midpoint of its 2-day range, if you like, because we have seen a 40 basis point round trip for the 2-year yield, but it's in the midpoint there, and that was after the CPI data salved some egos out there.
Yeah, and I should point out, too, that 30-year moved 54 basis points in 5 trading days. You had that 5-10 spread really steepening out, the widest, I should say, since 2021. And my question is, until bonds calm down, can stocks calm down?
Probably not, right? And so this is why I guess our shift begins now. Earnings, right? Bake earnings tomorrow. And I'm looking at the KBW Bank Index down another, 5% in today's session after a 9% rally yesterday. Very different tone. But what we get on those earnings call, nobody cares about the quarter that was. Everybody cares about the outlook. What do we get in terms of commentary? And on that, I'm going to bring you in, Tim, because we just had a great conversation with Sri Natarajan and Max Abelson. There's a great story on the terminal about a JP Morgan analyst kind of holding back in a conference call, a presentation, because concerned about maybe saying certain things that might get the attention of the White House. Yeah, this story getting a lot of attention. The strategist has been lauded by Jamie Dimon as one of our firm's great thinkers, and he's taken this unusual step to highlight fears on Wall Street over speaking out against the Trump administration. To that point, Max and Sri also telling us loan loss provisions and any commentary on how these banks tomorrow are thinking about this current quarter, given the impact of tariffs, how they view consumers and how they're doing. Remember, it's JP Morgan, Wells Fargo, and Morgan Stanley that are reporting tomorrow morning.
Thank you for the reminder. You know, going back to that.
I sense like you know this already, Scarlett.
Going back
it's
to
like
that,
the moment we've all been waiting for.
Exactly. Going back to that story, though, that you mentioned about JP Morgan strategists being careful about what they're saying, it kind of shows us how the U.S. is starting to, I don't know, in some ways behave like an emerging market. And you see this in the way that people are being extra careful in what they say and how they say things, as opposed to a developed market.
Yeah, I mean, it's going to be interesting to see the price action tomorrow, right? Because we have another day's trading, and we've had such a whippy week and so many differing things out there. And don't forget, there may be another China response later on this evening. China just getting up to start their day. They're meeting with some of their products with a 145% tariff on them. What's the response going to be? A further weakening of the yuan?
Well, you have to also wonder, too, what the tape is going to look like for these banks, guys, which I'm really curious about, right? I mean, we saw Delta rally despite pulling guidance because we had an up tape, and then you saw CarMax saying that their targets might not be hit in their time frame, and you saw it get pummeled. So I think how we set up the tape will be really interesting as well. I
agree, right? How investors read into it, or whether they're like, I don't care. All I care about is what I'm getting in terms of tariffs and what the future looks like in terms of a trade war. Do we have one? Do we have one that lasts for a long time? Do we have one that just lasts for a little bit of time?
Well, I think key is to watch what happens in China. I mean, if you just look at the tariffs each and every day, we're seeing more tariffs imposed by this administration on China, up to 145% from 125% just earlier this week.
Yeah, well, that number can still increase because it went from 125 to 145 today. It's kind of clear that there are a lot of tariff threats issued over the last couple of days, and adding it up, it's hard for us to understand where we're at because it's a moving target.
And what I'm curious about is, does China and Europe try to strengthen their alliance? It certainly seems like the PR messaging out there from from China, at least, is that it's, making definite advances to Europe and offering things to Europe and asking Europe for help. Will Europe, decide to help China, to the detriment of the United States, or, does that get nipped in the bud pretty soon?
Gotta say, I was sick on Monday, and it feels like this has been a month this week.
Oh my gosh, totally.
Crazy, crazy. All right, guys, that's a wrap. Our cross-platform coverage on radio, TV, YouTube, Bloomberg Originals. We call it the closing bell, and we will see you all tomorrow.